So Mike is amazing. All his books, I've
wanna come
yet
on
to
the
have one
podcast?
that's a miss. Yeah.
Mike, if you're listening, come on, buddy. We'll fly you out.
Let's do it.
He has his own podcast as well. He does speaking events all around the country. So I'm not going to regurgitate. When you go down this rabbit hole and you look to implement him, you need to read his book, listen to his materials, look for an accountant. So he actually has resources for accountants who work with his method that you can look up. That's another great thing you can do is you can find an accountant that's on board with this method matched together as well in your area. So all great processes, but the basis of this book is that you pay yourself first. So you're going to have 5 accounts, 5 bank accounts. You're going to set the first 5 up all at the same bank, and you're going to have one account that's solely for the income. So this is for everything that comes into your business as far as sales and revenue. Pretty simple. The next account that you're going to have is going to deal with the profit in the business. So that account is initially empty, right? Next account is the owner's compensation. So what you pay yourself. Again, next account, empty to begin with. Then you have the tax account, and then you have the operational expenses account. So you have 5 accounts in total. You have just the sales and revenue on one side, and then you have the profit, then you have the owner's compensation, then you have the taxes, then you have the operational expenses. And what you want to do is you want to look through some recommendations first off in Profit First, but you also want to look through your past financials and say, all right, in the past, how much was I incurring every single month in operational expenses as a percentage of sales? And what you'll do is you'll take that percentage and maybe add just a little bit of extra fluff on there just to be on the safe side. And when you get that revenue into the income account every month, if it happens all at once, you can do this right after. If it's over time, within the month that you get sales, so maybe you sell every single day, you get deposits every single day, do this twice a month. But you'll want to take that set percentage to cover all the operational expenses of the business over and just move it straight from the income account to the operational expense account. You look back historically and see how much you've been charged in taxes. You take that percentage of the revenue that you had, maybe add just a tiny bit of fluff at the beginning, and you move that amount over. So if it's 15%, you move 15% of the overall sales that you had that month into the tax account. Then you look at the owner's comp and you say, how much do I make? How much is needed in that? And, in order for me to continue living my life and get the pay. And so if that's, 20% of the overall income, you move that over. But here's the trick. And here's the most important part, the profit. So you need to stop thinking about all these different accounts as I need to satisfy these before I pay myself. Before you move a single dollar into the tax, the OPEX, or the owner's comp account, you need to move something into the profit account. You can start small. That can be 1%. That can be 2%, whatever it may be. If you look in the past and you've been wildly profitable every year, you can move a bigger amount, but start small initially and move 1% over. What you're doing is setting a habit to pay yourself before you pay anything else. And what that does is that instills a discipline where you become more focused on controlling expenses. You become more focused on controlling overall operations of your business in order to maximize the payment to yourself before you consider, hey, I want to get these fancy computers. Hey, I want to get these, fancy magnets to stick on all the cars. If you're, doing that at the cost of paying yourself, you're running your business incorrectly. And so reframe and think, I pay myself first, and then I worry about everything else in the business. And when you do that, you shift and you bring your expenses into line really quickly without realizing it. It's that discipline. Now you do this for a month or two, you see how it's going and see, all right, can I start adjusting these percentages? And as much as possible, during this process, you're slowly trying to bump up that profit each month. That's the key. As you bump that up, you get more and more discipline in your business. Some you might get, lucky because you have growth in the business, but if you're stagnant, you should still be able to bump up that profit, and you should still be working to pull out as many expenses as possible in order to execute for the clients, but maximize how much you're taking home. So at a glance, at an extremely high level, that's the initial part of Profit First. So before I get into some of the nitty gritty on what you do with 2 extra accounts, I want to stop and say, Logan, I don't think you've ever heard this before. So tell me, what doesn't make sense in what I said?
The only place where you kind of, or the question that came up first is that when you're talking about paying yourself first. I've heard that before for sure.
Yeah.
But you're saying that gives you discipline to keep your expenses down. And I guess I would think about how, I guess that's how you build the discipline, I suppose. But would you ever run into an issue with that, like a person paying themselves out too much beforehand? Or I guess you wouldn't be able to do that because you're thinking about the expenses on the back end too.
That's what you need to look in the past and see what you've done previously. So that's part of it. And then you start low and you work your way up. So I'm not saying go in there and you allocate 20% of profit and say, all right, I got to figure out how to fit the rest of this to cover the expenses, my taxes at year end, and what I need to make. No, start at 1 and then slowly work it up. You shouldn't be jumping your owner's comp because you have a little bit extra money from 10 to 20%, anything like that. Just slowly work the percentages up on that side while you work the OpEx down. And ideally, you might be able to work the tax down, maybe not. It just depends on your situation. OpEx is really where you pull it down. The other ones rise.
And then the profit account and that's the same account or a second account to the account that you pay yourself out of?
A second
account.
Yeah. So there's a profit account and there's an owner's compensation account. So owner's compensation is what you need to live on. And that one, I actually, prefer if even as your sales grow, maybe you reduce that one a little bit and try and live on the same amount you were before, the same fixed dollar amount. Because when you start bumping that up, you start getting used to a new lifestyle every time you make a little bit of money. And when that hard time comes, do you really have that fallback? Have you really saved enough? Or were you just taking that money and spending it in the moment? You lose that discipline again.
That makes sense. So the profit account is for the profit that the business itself made, but then you also have an owner's comp account that's for you.
Correct.
Separately. Okay. And when you're saying pay yourself first, you're talking about the profit account.
Yep, absolutely.
Gotcha.
My owner's compensation account pays me for the Iron House, my 401k.
Yeah.
And that's why I choose to have it fund at a high level. And that way I know that I'm getting ahead, because you've taught me that, investing at a higher rate of interest, and the company is basically going to double pay me at the end of the day. So everything I invested, the company is paying me back, and I just further invest it, and I know that eventually the company is going to sell and I'll get this amount, and then I have all this money I've already invested over here, so I'm basically double paying myself.
So you're saying with your owner's comp account, you put it right
I put it all in my 401k. Look at it.
Gotcha.
So Logan and I were talking about this briefly just a little bit ago about taxes, just in general. And what this also does is it sets aside the money.
They're criminal.
For your taxes ahead of time. So when you get to year end, you have the amount to pay. It's not as though, oh crap, I'm going to have to reach into my pocket and now write this check. That money's already there. And it changes your mentality. The next step in the Profit First method is that you set up 2 more accounts. The trick is these are at an entirely different bank.
So you worked up to 17 accounts is what we started this
Yeah,
with?
it's like roughly 17 accounts. It might be 14.
That's crazy.
So
there's ways that you can...
So one's a vault.
Yeah.
That like pretty much houses stuff for the future. Another one's like future equipment. So like they might be high numbers, but not all of them. Like some are 1%, 1% threes. That's what I'm saying. When you get with this, you can really scale your business in a way you couldn't see before because you're seeing it at it's a different way to look at a business.
Right.
And I don't want to steal too much of Mike's thunder. I'm not even sure if it's okay how much I talk about this. And so
he says he loves hearing about entrepreneurs. It's worked for us, so therefore we're qualified to be able to talk about it.
Buy his book, please. But Jeff hit on a couple things, which is this is a customizable thing. It's not a one size fits all. So I'm going through the 5 basic accounts, but as you get more into the system, you'll realize, for example, Jeff has a gym. He's going to need new equipment. So he should probably set up a certain amount for an equipment account that is allocated there. And then he can replace that equipment over time. And he can go back and look at, all right, when has my equipment failed? How often? How much do I spend a year per equipment? And just set that aside so it's ready to go. So it's never a scramble.
I'm the head on marketing. Google always changes the SEO, which is why I'm learning it. Social media has always changed algorithms. You have to inject money at different points. This allows you to be able to have that money to inject. Here's the deal. If you really want to win in business, you're going to look for every advantage.
Right.
And this is an advantage when you can see your money and how it really does it work for you. You're willing to make it work for you.